Ladies and gentlemen, good evening and welcome to Ajmera Realty and Infra India Limited Q1 FY2024 earnings conference call. We have with us today Mr. Dhaval Ajmera, the Director of the company, Mr. Nitin Bavasi, the Chief Financial Officer, and Ms. Sonia Agarwal, the Senior Manager for Investor Relations. Please note all participant lines will be in the listen-only mode, and one can ask questions only after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sonia Agarwal. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and a very warm welcome to all. On behalf of the company, I would like to thank you all for participating in Ajmera Realty and Infra India Limited earnings call for the first quarter of FY2024. The call will commence with the opening remarks by our Director, Mr. Dhaval Ajmera, and will be followed by the business performance discussion by our CFO, Mr. Nitin Bavasi. We have already shared the operational updates of the quarter in the first week of July 2023. The investor presentation and the press release based on the financial results adopted by the board have been uploaded on the stock exchange website and can be downloaded from our company website as well. Please do note that some of the statements in today's discussion may be forward-looking in nature, reflecting the company's outlook and may involve certain risks and uncertainties that the company may face. I would now like to hand over the call to our Director, Mr. Dhaval Ajmera. Thank you, and over to you, sir.
Thank you, Sonia. Hello and good evening, everyone. I hope everyone is having a good time, and like us, I'm sure every one of us really enjoying the way the companies have been performing and India has been growing. We just hope that this continues and we all are able to contribute to something or the other for our growing economy in India. Just to give you, a small backdrop about, with all whatever is happening across globally, India still stands out for its growth and potential. And the, outlook, the economic outlook always looks very promising, with growth rates of 5.9% in 2023 and estimated at 6.3% in 2024. With this, we are very confident that real estate is also one of the major contributors to our growth, and we can definitely see with whatever is happening all across in our results, and also to many real estate companies all across India. I would also want to mention that with the 4.4% GDP growth rate, the nation is actually weathering to a global economic headwinds, while the market remains resilient as central bank tightens monetary policies to target inflation levels. But still, with all these options, we still see a good traction coming in real estate. And I was just recently, there has been news that the half 1 year, that is the first half of the year from January to June 2023, the luxury market has been on a really upscale, and 50% of has been on a growth of 50% year on year as compared to Jan to June 2022. So this only shows customer confidence with the high demand, especially in urban centers, fueled by rising income levels, nuclear families, and changing in preferences and asking for better homes, bigger homes, is actually moving the demand up. So this has been very encouraging. I would like to now continue with our company's performance, which has been remarkably very strong, as evidenced with this impressive performance in Q1 of FY24. As we all know that we have done a sales value of approximately 225 crores, where we achieved a remarkable 60% increase over the last quarter. Sales volume have also increased and shown a growth performance of about 96% to 135,000 square feet. This positive outcome is a testimony to our successful execution and revamped sales strategy, which we applied for our projects in Lugano and Florenza and Bangalore. And we also got a great sales velocity and launch for our project as Ajmera Eden in Ghatkopar. these were the two, I would say, major drivers for our, this growth success for this quarter. Now coming to some exciting projects updates, I just want to start up with our flagship one, Ajmera Manhattan, where we have sold and booked value of about 656 crores, which is 45% of the inventory already sold. And the project has also got significant interest from buyers. We have been having steady sales happening in this project, and construction has also been equally moving at a good pace, where we've already reached in Tower B to the ground level, and Tower A is almost on the verge of completion at the basement level. The Ajmera Greenfinity and Ajmera Sikova, our two other projects, the boutique office and the small affordable project in Mumbai, is also set to get completed and delivery in the quarter 2 of FY24, where we have about 84% and 89% of the respective projects inventory already sold out. So that project has also been significantly completed, and we are very sure by the time, which is over the next few months when we complete our project, we should be 100% sold out. Ajmera Freeway in Juhu, our luxury project, is also done a great progress in terms of construction, and we've already reached above ground, and we are proceeding and finished almost completing third slab now. Impressively, the project has also seen 24% of its inventory being sold by the end of the quarter, in addition to the Ajmera Eden project, which we launched in mid-June, and we've already sold 14% of its inventory. The Bangalore market has also proven to be a key contributor for our growth this quarter, making remarkable strides during the quarter. Our mid-luxury project, Ajmera Nucleus, is 96% sold and is expected to be completed by this fiscal year. Ajmera Lugano and Ajmera Florenza, which contributed to 31% of our total sales value this quarter, has also seen a great result with our revamped sales strategy, and they were actually contributed also towards 24% of our collection has come from these projects during this quarter. The company is diligently focused on its expansion, its project pipeline across Mumbai markets in the coming months. As we have announced earlier, during the year we have a visibility of total of 3 more launches to come in, which includes development of our recently acquired project in Vikhroli and other Mumbai regions. And the total estimated value of all these 3 projects put together is about 1800 crores, with approximately 900,000 square feet of carpet area to be sold. Apart from this, we have apart from our ongoing and upcoming projects, we also have a land bank of approximately 11.6 million square feet, which is in carpet terms approximately about 1.2 crore square feet in different parts of Mumbai, and we are seeing a great potential coming out of this. Wadala, which has our ongoing one, and Wadala has a total potential of 3.65 million square feet of this development, out of which 1.8 million is residential and balance is commercial. Obviously, these projects will come up in phase-wise manners as in how we start, the demand picks in and, we start selling significantly, we'll start launching these projects. Moving ahead for the year FY24, we have set ourselves a target of achieving around 1,000 crores, and I'm pleased to share that 225 has already been achieved in this quarter. The phased development of our land bank and the market demand, and consistently evaluating asset-light JV JDA models to target opportunities for lucrative acquisitions, and our commitment to timely delivery is driven by ensuring executional efficiencies. And I must say that that we are really immensely satisfied with what we have done, and we would like to emphasize that the operational efficiency is further visible with faster execution, new launches as promised, launch velocity, mindful acquisitions, and focused sales strategy has all been the key contributors towards our growth strategy for our company in this financial year and the coming, and I'm very sure this is also going to continue, this momentum is going to continue for the coming quarters as well. I extend my heartfelt appreciation to entire team of Ajmera, its shareholders, the value customers, and for their continued support and trust which they laid on us, and they gave us an inspiration to work faster, better, and continue with our better efficiencies always. Together we are poised for a prosperous future, reaffirming that Ajmera Realty is positioned as a leading player in the real estate industry. Thank you all for joining us on this call. I would now look forward to hand over to our CFO, Mr. Nitin Bavasi, to take you through the numbers and the operational performances for the quarter and the year. Thank you.
Thank you, sir. And thank you, ladies and gentlemen, for joining this call. I would like to present some of the key performance highlights and then open the floor for questions and suggestions from your side. In the first quarter FY24, we witnessed a robust growth with sales value 225 crore, representing 60% increase compared to the previous quarter. Volume-wise, we achieved sales of 135,000 square feet on carpet area basis, which is also a remarkable 96%, almost doubling, as I say, over the previous quarter. And our collection stood at 111 crore, which is also a very stable performance. During the quarter 124, we successfully implemented the revamped sales strategy for our Bangalore project and successful sales launch of Ajmera Eden, which collectively contributed almost more than half, precisely 53% of the total sales value, which were the key factors driving the overall operational numbers. It is important to note that while positive and continued market sentiment contributed to this growth, year-on-year comparisons are not directly comparable due to the massive launch of Manhattan project the last year, and which we had the robust numbers coming from that particular launch as such. Turning to the financial numbers, the first quarter FY24 exhibited outstanding performance. Our revenue stood at 118 crore, recording about 113% increase over quarter one that of FY23, which is year-on-year basis comparison. The EBITDA stood at 39 crore, representing almost 112% jump over quarter one FY23. Additionally, the PBT stood at 29 crore, which is also a remarkable 88% increase over quarter one FY23. And so is the case with the PAT, which is the very impressive growth, which is at 22% in absolute terms, representing 82% increase that of FY23, quarter one FY23, I meant to say. The strong EBITDA, PBT and PAT margins stood at 33, 25 and 18% respectively, demonstrating the effectiveness of our strategies and contribution of our revenue-eligible projects to the bottom line. We are confident in our ability to maintain this positive momentum and deliver strong financial numbers in the forward quarters. We remain committed to deleveraging and improving our debt profile as well. Our efforts have been rewarding, as evident in the debt-equity ratio, which is stood at 0.97:1, which is significant improvement compared to 1.1:1 in quarter one that of FY23. Notably, this marks a significant milestone, as it is the first time our debt-equity ratio has come down below 1x that of the equity. We are pleased to share that financial performance and overall credit profile improvement yielded as well into the reduction in our average cost of debt, which is around 11.9% as compared to 13.7% as on March 23. We are delighted to report a strong revenue visibility of approximately 3,960 crore, encompassing of our existing project as well as upcoming launches. In the next 6 to 12 month projects at an advanced stage and those which are already received the occupation certificate are expected to contribute almost 233 crore to our revenue, and our mid-stage projects, which are the set of the projects which are at start or the different life cycle of the project cycle, which is going to estimate or contribute to about 1,900 crore to our revenue over the next 36 months. The estimated net cash flow from the existing project portfolio are expected to be 980 crores, reinforcing our strong financial performance and ensuring the successful execution of our growth strategy. This robust revenue visibility provides confidence in our ability to deliver sustained growth and value to our all stakeholders. The floor is now open for questions and further interactions. Thank you for your continued support.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of G1 from Sir Capital. Please go ahead.
Congratulations, Dhaval bhai. There are a few questions. First is, in the press release, we are saying that we will be able to achieve 5x target by 2025. So, are you implying of 2,000 crore sales value in 2025?
So, if you look at, the way we have grown over the last 1 or 2 years, and if you look at our numbers, and that is where we are slowly and steadily moving ahead. And over this year we are launching 3 more projects, which has, a sales value of about 1,800 to 1,900 crores. And beyond this, our land bank, as I said right now, which is about 1.2 crore square feet, obviously those, from there also some projects will start coming in, and definitely if you add in all this, we are definitely on the growth path, and we are very confident that we will achieve those 5x numbers by the time we have set.
So, shortly, are you saying 2,000 crore sales value in 2025?
Well, 2025 is a number which I would wish and want to target, but we are aiming towards a 5x growth in the next 5 years, starting 22 onwards. So within 26, 27, definitely we should be there.
Because in the press release, we have given a 2025 specifically.
So let me explain that piece with the numbers that, we have been, in the range of about 350 to 400 crore as we have given in the investor presentation, the 3-year trending as well kind of a thing. So from that base, we are meaning that, 5x numbers, which is in the range of 12 to 1,500 crore on an average basis, considering the unsold inventory, which is about 1,400 crore, plus new launches and the phase-wise development from the land bank, as Dhaval bhai explained. So basis all the aggregate and the few new acquisitions which is going to add the momentum to this number is definitely which will inch up towards this 5x growth plan.
Okay. The second question is, we said in the press release that we are about to enter new micro market in second half of the current financial year. So so which micro market we are basically targeting?
These are all projects. Sorry, go ahead.
So is it Kanjurmarg that we are talking?
No, that Kanjurmarg is not that one. We are talking about new acquisitions in different micro markets of Mumbai. What we are talking about is significantly new acquisitions, and these new acquisitions, we are just on the verge where we cannot, as the NDA purpose, we do not want to release or probably give, venture out details, but it's going to be in the suburbs of Mumbai, Western and Central Mumbai both.
Okay. Third question is, in the future potential in the Wadala side, we have given 1.8 million square feet for residential, 1.8 million square feet for commercial.
Yeah.
If I remember correctly, it was 3 million square feet for commercial and 3 million for residential earlier.
So that is
what
do you call the sellable area. So, what we are talking is the carpet area. So 1.8 times if you do the sellable becomes 3 million.
Got it. So same is the case for Kanjurmarg. So we are talking of carpet area.
Because now RERA and everybody only recognizes carpet area, we have changed the terminology and kept it only one, so that it is easy for everyone.
Perfect. And any color on the date reduction by the end of this year?
So yes, we already in the trajectory of below 1x now, and we want to, operate under 1x. That's going to be our endeavor at a different varying degrees because of the kind of business development activities also which we are undertaking. However, we have some low-hanging fruits as well, to tap onto this cash flow generation. So, all this put together, our endeavor definitely going to be 1x, below 1x to operate throughout the year.
Okay. Any plan on any land parcel monetization to pay off the debt?
So we have there are some lands which one land or two lands which we are already under discussion for monetization, and the other things are also going to be on the development front. So to answer your question, yes, one of the lands not on the development front of Wadala or Kanjurmarg anywhere, but somewhere else where we are looking to monetize that land.
And let me clarify, this is investment property which we are monetizing, because the stage of that property which we have invested and to which we have brought this by resolving challenges into it is a lot of value addition or value accretive has happened. It is not for the purpose of debt reduction. However, definitely it is going to help us on the debt reduction side as well.
Okay. Perfect. So that's it, I think. That's it. Thanks a lot, Dolby.
Thank you.
Yeah.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Aditya Sen from Robo Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. So, as we were targeting around 4.5 to 5 lakh square feet in FY24, and it's already great to know that we have done 1.3 out of it, 1.35. So, going forward, can you please guide me as to how much sales will be made in Q2, Q3, and Q3, either in terms of square feet or even in terms of percentage would do? Just the ballpark numbers.
So as there into the presentation, we have unsold inventory which is almost about 1472 crore, and out of which the first 4, which is the nucleus Sikova and nucleus C-wing, which is the residential, which is at a very advanced stage of the completion. So those ones are the very I would say high contributors to this number. As well, the Manhattan sustained sales phase has already been, we have set up our regular pattern into that. So that is also a very good and a high value contributor. And the very good surprise and the pleasant element coming from the Bangalore market, as we have explained in our opening note. So that particular piece is also contributing and expected to contribute further. So all these contributions, plus we have launch pipeline which is about 1800 crore worth of the sales potential. So both these put together is which we are giving the confidence to us that we should be surpassing and entering into the 4-digit league of the 1,000 crore as a target which we have set for ourselves.
Okay, so which quarter will be the heaviest? Because last year I saw Q3 was one of the weakest quarters. So should the sales remain in same pattern like last year?
So we are, as we said that there are going to be 3 launches happening this year. Obviously, these 3 launches will be hopefully we should have, great boost or spikes coming in through the launches, and every launch, if you look at majorly, it's going to be in the last quarter of the year where we'll have these launches coming in. And over and above that, we have about 6.5 lakh square feet of, roughly unsold area which is left from our current inventory to be sold. Obviously, these are at different stages. So, if I put this together to answer, I think we are significantly looking at a largest jump over the last quarter. But even the second and the third quarter will have a sustainable number coming almost on the lines of first quarter around that.
All right. Thank you for that. And also for the total of ongoing plus upcoming projects would be around 3,200 crores, and we'll also have some collections over that. So do we have 100% share in that, or there's a component of JV also in it?
So as we have given the entire, disclosures, Bangalore market we have 70%, and at upcoming launches, Central Mumbai too, we have the 85%, which is the aerial stake into the projects. Rest all the other projects, SPV level and at directly into a holdco level, we have 100% stake.
Okay, all right. Okay, and also on the land parcel, can you please let us know the land value, if it's possible for you?
Well, it's a very vague term, to be honest with you, because if you look at the numbers which are there, it's something which we honestly do not want to put in as a very...
It's all right. We understand that. So if I can ask this question, like how much share of land do we have in the Kanjurmarg, Central Mumbai, Ghatkopar and Juhu? Can you answer this question if this is possible for you?
Yeah. So as far as the projects which are coming up, as we've done that a total of about 1.2 crore square feet right now is our land bank, and currently which we are launching projects, okay, which is one in Central Mumbai 1 is Central Mumbai 2, and one is Vikhroli. They are all part of the Central Mumbai, say only, which is about 9 lakh square feet, because I'm not giving acreage or something, but I'm just giving you the launch pipeline or the launch project size. So the ones which we are going to launch is about 9 lakh square feet, and over and above that, we would have about 1.2 crore square feet of land banks in different areas, being Bombay, primarily Bombay, but also some things in Pune, Bangalore, and other places.
Okay. Thanks a lot for your answers. Thanks a lot.
Thank you. The next question is on the line of Mihir Desai from Pendulum Investments. Please go ahead.
Thank you for the opportunity. So firstly on Pune project, I just wanted to check an update on this, sir.
Pune project, it's a slum rehabilitation project where, we've 50% of our slums have already been vacated. We are on the verge of clearing up the balance, and very soon we should be able to launch that project. However, we've not put a timeline right now because of the complexity of the matter, but things are moving very positively, and hopefully it should come out in the AVIL very soon.
Okay. And secondly on, sir, if you can give us some guidance on or revenue targets of, some sales value, in terms of sales value or revenue targets for 25 and beyond, FY25 and beyond.
As we said earlier also, with current and existing projects, which is about 4,000 crores, and plus over and above that, we have land banks about 1.2 crore square feet, which all will come in place. So if I have to put in a number point of view, we are looking at a steady growth coming, and definitely moving ahead. If I 1.2 crore square feet coming, plus the 4,000 crores of the already existing land launches and the projects, and plus the new project launches this year will contribute 4,000 crores over the next 3 years, and plus 1.2 crore square feet which will come in over the period of time. And over and above that is the acquisitions or the JVs or the tie-ups of society redevelopment, which we are constantly endeavoring and continuing to do so. That will also add up to it. We honestly do not want to put in a number right now that what do I estimate 25 to be, because we are actually wanting to show you results, and that's where we are currently targeting to ensure we launch all the projects what we have committed.
Sure. Sir, lastly, I had to ask one macro question. Like, as we see the realizations of real estate has been going up post our pandemic. So, do you feel that the current realization which we are sitting on will be sustainable, and the demand for the residential will be intact?
So if you look at last 2 years, definitely there has been a great demand. We personally believe, and that has been also, if you look at the data and the statistics, real estate as an investment class has become a great option, and people are looking at it very seriously as an investment option all across, as compared to maybe gold, mutual funds, or stocks, or whatever it is. But people definitely look real estate as an investment class now. Number two, with the Indian economy, which is definitely on a very resilient and a strong growth path, we are looking at a rising income level, and we are also looking at a very great, I would say, spends coming from the middle income families and somebody who's as a working class people, which definitely is the major micro market or the market for Indian economy, and definitely Indian real estate. So to answer your question, we definitely see that this growth is sustainable, and at least next 5-6 years definitely looks very promising. And as a short-term view, I would say this, and I would also say with the kind of projects where we are spread across in different micro markets, and definitely when we have a largest stock like something in Vadala or Ajmera, we are not going to launch everything at one go. We definitely go phase-wise depending on the consumption and the micro market areas consumption. So definitely we don't see too much of an issue, and the growth will definitely come on next 5-6 years for sure.
Sure. Thank you, sir. Thank you for answering my question. If I have further questions, I'll join with you.
Sure.
Thank you. The next question is from the line of Bharat Seth from Quest Investment Advisors Private Limited. Please go ahead.
Hi, Jawahar Bhai, and congratulations, Mr. Bhavisi, on excellent performance, as well as, terrific pipeline flow launch that you have described. Jawahar Bhai, just want to understand that in previous question answer, you said that we have one redevelopment, slum redevelopment in Pune, but we are also looking, say, some of the redevelopment in MMR region. And so, can you give some color on that? How big is that opportunity? And looking at our brand name in MMR, so redevelopment and cost economic benefit vis-a-vis these new launches.
So, today we are looking at, if I primarily look at options available as land, obviously in Mumbai, and I would now even say Pune, in the central part or the main area, where we feel there is still a lot of demand, and rather than probably moving outskirts and looking at lands which are probably, blocking your capital towards the asset investment, there is a great redevelopment opportunity coming across everywhere. And with the kind of, velocity of sales and our brand value, we are getting great response from it. This Pune land, what we are talking about, is a slum land which, we had acquired a long time back. Obviously, we were working on it, and hopeful by, this year we should be able to clear things off and then probably launch it. As far as economics of this is concerned, we are still working out, all those permutation combination, because with the new regulations, definitely rules change and the numbers change. But anything about 20% is where we are.
So in MMR region, cluster development, and with this rule change, what we are talking, how it has changed the economic viability of the redevelopment of a large project?
So as cluster redevelopment is a new regulation which has come in, it gives a great attraction to the old tenants and also to the new developer, which will help, all these old societies, larger layouts to come into redevelopment process. There has been, as far as the premium costs are concerned, in the Mumbai real estate market, there are two basic contributors to the cost. One is the construction cost, and second is the premium cost. Whereas depending upon the area to area, but sometimes the premium costs prevail over the construction cost, or the construction cost and premium costs are at par. So when you have a discount on these premiums, definitely your cost becomes lower, number one. Number two, your interest cost, your initial investments become lower. So all those has a benefit which will eventually have lower costs of construction and project costs, thereby increasing the velocity of pricing and sales in that particular micro market.
So are we really talking on this cluster development, any of the large society, or what stage are we, and how big is that overall opportunity for the next 5 years?
Well, it's a huge opportunity. I mean, in terms of numbers, it can be as great as, a couple of thousand crores. Because if we look at, every plot in South Mumbai, if, at least 5, 7, 10 buildings coming together, or maybe in the central parts of Mumbai or the western parts of old societies of Mumbai, or even if I, just to give an example of our, previous projects which were done historically, like Yogi Nagar in Borivali or Shastri Nagar in Andheri, these kind of projects come in for redevelopment is a huge potential. We are working right now. We have given offers, but obviously all these, with societies, it is a matter of time and it is a lot of time-taking process. It's not going to be as easy as what we think of buying a land, because there are equal amount of tenants involved and that kind many meetings happen. So obviously it is saying, so if something definitely click in, which right now we have not, in all our projections, we have not taken anything into our mind, but if something come in, definitely we will add on and, announce it to the market.
Okay, thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Neeraj Mansinka from White Pine Investment Management. Please go ahead.
Yeah, thank you. I just have one question. We have an EBITDA margin that we reported 32.9 for the quarter. Can you tell us what is the EBITDA margin on the projects that are being launched? Because, just that's the question.
The EBITDA margin actually, coming from the revenue eligible projects, which are currently we have Manhattan, Greenfinity and Sikova. These are the projects which are revenue eligible, and, going forward, because the Previ is already hit, but on the sales side, the threshold of 24% sold, so that is also going to be a revenue eligible going forward. So those basis we have the revenue recognition and hence the EBITDA and as well the other bottom line support coming from.
No, I'm not talking of the reported numbers. I'm talking of the projects that are being launched or supposed to be launched in FY24. What are the potential EBITDA margins that you would be expecting on those projects?
So as we have already entered into a very stable margin trajectory, like, the 30% plus kind of a EBITDA and as well the PAT margin in the range of plus 15% kind of a thing, we endeavor to remain in this range only.
No. I have some related questions. See, if your prices of the industry has gone up and the inflation is not so high, ideally the margin should increase. And the reported margins also have a cost realization component of the past where the realization might not have been as much higher as they are right now. So won't the margins go inch closer to or excess of 35%?
So that is what I explained, that, it depends on the composition of the projects which are coming into the revenue and the composition of the progress at which the revenue gets recognized. That's the function of the revenue and as well the margin contributors to it.
No, I'm not asking about the reported numbers. I'm still asking about the projects that are yet to be launched in FY24. And those projects, why wouldn't the margin inch closer to 35-40%?
So if you look at, our projects which are yet to be launched, there are some projects which are historical land banks like Wadala. There are some projects which we take into a redevelopment process, or there are some projects which we run a JV, JDA. Every project has a different margin. But we look at different projects for different margins. Some are slum redevelopment, so it's between 30, 25, 30, 32%. That's where the range is. So to answer your question, every project will have different EBITDA margins.
Yeah, understood that.
And
Dhawal bhai, question on the Wadala, what should be the EBITDA margin of those projects? Just I wanted to estimate some forward looking by my own. On the Wadala project only, which where the land bank is owned by you, what should be the EBITDA for those projects?
32%.
Okay, got it. Okay, that's all. Thank you very much.
Thank you. The next question is on the line of Rahul Shah from Crown Capital. Please go ahead.
Hello. Good evening, sir. So my question is on the, you mentioned you are targeting a sales value of 1,000 crores and agreed with that. So if you consider this trajectory per quarter, so you will continue that, let's say, and then we will have a significant jump in last quarter. But that is on the sales value. How does the revenue recognition work? Will it be also on the same lines? Does it work like that?
So typically the revenue recognition is based on the progress of the project, and as we have given the complete breakup of the sold position and where from the revenue is expected to come. So that particular position is for the advanced stage of the project, which is almost about 678 crore, and the balance revenue going to come from the inventory which is available for sale. So that is how the revenue recognition over the life cycle of the projects.
Okay. So what is like your total revenue expectations for this? Have you projected that? Have you given that somewhere?
So as we have given the guidance or the status of the project, the Sikova, Greenfinity and Nuclear Sieving, which is expected to getting completed. So balance of the revenue from the inventory to sell and the unrecognized revenue also going to be recognized within this financial year. Plus, there is going to be a sustained sales coming from the Manhattan. Privy, as I explained, is going to be becoming the revenue eligible project from next quarter onwards. And rest of the revenue is as well going to contribute it from the Bangalore market. So that's how the revenue contribution trajectory for our portfolio.
Mm-hmm. Okay. And in your remarks, did you mention something about cash flow visibility? I think I missed that.
Yeah, so basically the cash flow from the ongoing projects is that of 980 crore, and which is going to be based on the balance receivables of the project minus cost balance inventory to sell minus cost to complete and minus debt on the project on post-tax basis. So that's how the estimation of about 980 crore.
And for the current year, right?
Over the life cycle of the project, because as I explained, the completed set of projects is going to contribute almost out of this 900 about 100 crore. Advanced stage of the completion of the project, which is going to contribute about 80 crore, and mid-stage project like Manhattan, Lugano, Florenza, PV and Eden is going to contribute balance about 800 crore. So that's how the breakup is.
Okay. And the EBITDA margins, you said this trajectory will continue, so you will definitely stay about this 30% range, or maybe even 32% range.
That precisely. That's our estimation.
Right. All right. So thank you and all the best.
Thank you.
Thank you. The next question is on the line of Vignesh Iyer from Sequent Investment. Please go ahead.
Congratulations, sir, on good set of numbers. There's two questions on my side. First is when we decide on selecting a project, say JD or JV, what is the IRR that we are looking at before selecting the project?
So when we, as I said, we look at different projects in a different way, depending on the complexities and how easy or difficult the project is going to start. But if you look at the IRR terms, is anywhere above 24-25% is what minimum we look at, and going beyond that, because below that we don't really it makes sense for us to put in our hands on the project. Maybe some uncertainties coming in, it will jeopardize it. So we look anything above 24-25%.
Okay, that is the minimum threshold you have in mind. That is the minimum threshold the company has in mind, right, before selecting the project?
Yes.
Okay. And second question is on the debt equity side of it. I mean, what does the management think of this debt equity ratio, say 2 years down the line? What does the management think of reaching? I mean, or it is the plan to remain at this level only?
So the debt is a function of the project and its operations. When while we will definitely continue with having debts with related to the operational or the cash flow point of view, but as far as group level debt or the corporate level debt is concerned, we will definitely make it to as low as zero. But operationally, project-wise, if there are debt required, we will continue to have. So, to answer your question, as the ratio right now is below 1, we endeavor to keep it definitely below 1, always, even though if it is project or group level, but definitely at the corporate level debt, we'll make it as significant as zero in the next 3 to 4 years' time.
Thank you. That's all from us.
Thank you. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity again. Interest cost is as of now 11.9%. So just wanted to know if it will be in the same range going forward also.
So very good question. We already had the, good amount of savings because of our credit profile improving and lender taking the cognizance of that. And we hope that, the RBI has given a skip to the rate hike kind of a thing. So it will continue to do so, driving basis on the inflation and the inflation tolerance kind of a thing. So basis those ones, the floating rate of the borrowings or the loan which we have should remain in the range. And any incremental debt and such kind of a thing, we endeavor that, basis the risk profiling of the project and such kind of a thing, we try to remain within this range so that, overall cost of debt remains within this particular, trajectory.
Okay, got it. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Nitin for his closing comments.
Thank you, ladies and gentlemen, for your very insightful set of questions, and as well, couple of suggestions as well. It really inspires us and excites us to do further bettering. We will definitely continue to do so, our, teamwork and the hard work at project portfolio level, and we'll come back with a very good set of numbers. Till then, such time, I wish everybody a very good time and safe time. Thanks for your patient hearing and participation.
Thank you.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Ajmera Realty and Infra India Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.